Good morning, good morning, good morning. I think we're live. I don't know if we're live or not. I'm trying. I still got a lot to learn, y'all. Got a lot to learn, y'all. Good morning. What's popping? When Cuz in the building. And welcome to Tuesday, March 31st. And we're going to talk a little trading today. We're going to talk a little, I don't know, talk a little ride share, little Amazon reviews and what's going on with Amazon and just what's going on in the world, y'all. So I figure let's get down to it. First thing first, I want to show you guys something on my chart here. Let me bring this up. I want to show you guys something here. When this is just me. Don't listen to me. I ain't financial advice. I don't know what the hell I'm talking about. But here we go. Okay, there's something I want to show you guys here. Right? And you always got to be aware of the bigger picture. Because there have been rug pulls the last 2 mornings, and I think we're going to get another one today. See this big channel here? All-time high, come down to the midline. Midline works, you know, it serves as support, even though we're in a downtrend. Bearish, breaks below, pardon me, sets the trend, breaks back up. And this is what we've been experiencing, right? We see the ups and the downs. We see the market going back up, and people think buy the dip, and that's all this is. Buy the dip, till it finally breaks. Institutions say, no, 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 we're taking our money out. Retail still trying to buy the dip. Everybody's trying to buy these dips, which is good. I mean, there's room there. But in the overall trend of the market, we are bearish. I don't give a shit what anybody says. Math is truth, numbers don't lie. Whoop, we are bearish. So as long as we're in this channel, we have to be aware of that. Now, I say this. We're all the way down here at the bottom of the channel. So technically, are we going to bounce back up to this midline? Overall, I'm talking about higher time frames. We don't trade higher time frames. We trade lower time frames. But you need to be aware of this if you're going to get into this market. That's all I'm saying. I'm not saying nothing else about it except that. So let's get back to our 5 minute. Let's get on board here. We're going to I'm going to take this trend out of there. Could always put it back in when we need it. We know here, look at this. Yesterday, Monday. So from Friday, big sell-off. Thursday, big sell-off. Wednesday, somewhat of a sell-off, right? We got a little relief rally overnight. What I want you to look at is these overnights. This is what I don't understand about the market. And this is why I say it's shenanigans. Some shit going on, y'all. And don't worry about the market open at 9:30. We don't trade the first 15-minute candle. We're setting up for the orb. So that gives me a chance to kind of run my mouth a little bit here. You see, the overnight Asian market, London market, it'll pump the price up a little bit. American pre-market opens at 4 a.m. and institutions will move it around a little bit, and then all of a sudden you get the big rug pull. Here again, right? This was nice downtrend, pumped it up and then fell apart. Pumped it up and then fell apart. Pumped it up and then fell apart. I mean, you guys see it, right? I mean, it's what it is. So now here we go. Markets just opened 9:30. Yesterday, well, Sunday at 6 p.m. when the markets opened right here, pumped it up, pumped it up, pumped it up, rug pull. Came on down. And we know what's causing it, right? We know that, well, overall, we think we know. You know, on the surface, they're telling you, well, it's Iran, it's Iran, it's Iran. But, you know, that's part of it. I mean, that's the distraction. I still maintain every stock out there is overvalued. It's overvalued, right? It's just, and what's the catalyst now? The last big pump, again, was AI, right? AI. And right now, I just, you know, okay, what's next? We got the Artemis rocket. Artemis 2 mission takes off tomorrow out of Cape Canaveral, scheduled for tomorrow. It's going to be the first time we've sent people back towards the moon. This is not going to land on the moon. This is supposed to go around, swing around the Earth, go to the moon, make a loop around the moon, and then come back. I guess it's a test to see if the Orion spaceship or the Orion capsule and all of that's going to be in good working order. I don't know, but I mean, dude, that's like 240,000 miles away from the planet Earth. Ought to be interesting. I think that's scheduled to blast off at I want to say it's I think 6:24 p.m. tomorrow. I don't know if I'm gonna. Well, I won't be able to go live with it, but you know that's a pretty cool deal. I wanted to go watch it. I wanted to drive up and go watch it, but you know other obligations won't let me do that. So anyway, now we're here this morning. Let me get rid of that. I don't need that. We're gonna bring up our daily indicators for our early morning bias. Okay, and this is how we do this. So we have our VWAP. This is anchored for the session. Started at 6 p.m. yesterday. We're above VWAP. It's bullish. We're above the midnight open, this white dotted line. That's bullish. We are also above 8:30 open. Now we're above 8:30 open, which is bullish. So when we bring in our orb settings, it's going to give us a few other things here to look at. This is the orb from yesterday. Look what a beautiful thing that was. But dude, I took a quick scout, and just for the record, all right. We still yesterday was a break-even day, $6, just break even. Got in, didn't like what it was doing, got out, but I also got scared out of it. We still haven't lost a trade yet, but I mean, dude, if you're only breaking even, how are you going to lose? So anyway, that's neither here nor there. This is an eval. Everybody can see this is an eval. Let me get that out of there. There, you see it's an evaluation. So this is still that same eval that I said I'm just going to trade the orb. Just trading the 15-minute orb, maybe a little momentum and flow. But the markets the last 3 weeks, for me, I can't trade them. I'm not that good. I listen, I'd rather be safe. Pick off, $30, $40, pick off $6, $10, $8, whatever, break even. And there's a lot of break even days in here. So I just wanted to make sure I showed that so that everybody knows where we're at. It's all transparent. But now we've got this, right? So now we're going to add in, we got a fair value gap down here at the midnight open. We're hitting up against, we just breached the London high, right? Previous day's high is this yellow up here. We're bringing more context into the market. We look at yesterday, 15-minute opening range breakout. Well, it was absolutely to the bottom, but look at this range. Hold on. That didn't do what I wanted to do. Hold on. Look at this range here, y'all. This range from yesterday. 165 points. That is at $2 a micro contract. What's that? $320, $330 on one contract. If you go the full range, that is a big, huge range to trade. That had me nervous yesterday. I felt like we were going to go down because looking at oil right now is currently trading at 103.50. If oil is up, if what they're saying the last 2 weeks, the reason why the markets are retracing is because oil's through the roof. Well, oil's at $103 right now. Why is NASDAQ going up? Doesn't make sense. Are you telling me that the institutions are like, okay, we sold off enough, we can start buying back now? Well, then that means they lied to everybody and said that the $100 a barrel oil was the cause for the rest of the S&P, the NASDAQ, the Russell to drop. Shenanigans. The market, listen, bro, the market is based on perceived value, not actual value. And all we can do as traders or aspiring traders is to play in the mud. It's their game, bro. It's their game. So anyway, that's where we're at right now. Let's see what we got going on for this morning. We still haven't hit our 15-minute orb. All right, and now I'm going to bring in one more piece of information, and this is the Smart Money Concepts indicator. I do use 3 indicators. So we do have fair value gap here. This is bullish, right? I mean, listen, it's trying to go up. If we put a trend line in there, right? We're trying to go up. Hold on a minute. Bink. Put the binky in there real quick. Get the magnet back on. It's trying to run up. Right? We can see that. But do you trust it? And in this market with so much uncertainty, I don't necessarily trust it. The other thing to look at here too is if you look over here in this corner, part of this indicator here up here gives me a higher time frame bias. Right now, the 4-hour time frame is neutral. The 1 hour time frame is bearish. I still say we're overall bearish in the market because there's no reason for it to go up. So we're going to wait here on this 15-minute candle, and we're going to take away the smart money concepts because we don't need that right now. And we'll see what's going on, y'all. That's the deal. Am I bullish or bearish on the day? Well, we're going to let this 15-minute orb set up. Technically, in the short term, on the 5-minute chart, I'm bullish. But that's subject to change. Anyway, I'm trying to see, is there anybody in the chat? I don't see anybody in the chat this morning. If you're out there in the chat, say hello. Let me know what's going on out there. Let me know you're alive. There you go. Let's make sure the chat is working correctly. Real quick, we can look at a couple of other markets real quick. I wanted to show you guys this because I know a lot of you guys are into the rideshare game like I am. Listen, Uber was at 69 bucks overnight. Right? We'll look at the bigger picture on Uber. We'll look at the 1 hour on Uber. Again, right? Again, we know that they was blaming oil for the S&P and for the NASDAQ to come to sell off. They're saying, oh, it's Iran, it's Iran, it's Iran. Iran ain't got, on the surface, it might have something to do with it. But, you know, there again, these stocks are so overvalued. And what's going to push them up, right? So if we look here, here's another little, it's not a short-term trend line, but it is a trend line. Does Uber get here and break? Well, look, you got a bearish fair value gap right here. If, this is a big if, I won't trade Uber. But if I was trading Uber, maybe options, I would have to take into account this bearish fair value gap, right? And not only would I have to take into account the bearish fair value gap, I'd also have to take into account Fibonacci retracement, right? We're right back there from the last high, which is up here, 73.84 to the bottom, right? We are now exactly at the 50% retracement level. This is an area where institutions or retail, whoever is trading that particular asset, whether it's a stock, an ETF, whatever, they look at that 50% retracement level as not a sellout point, but as a reload point. So if you're short Uber right now, and I don't see why you would be bullish on Uber or Lyft or DoorDash. I don't see why you'd be bullish on any of these. But if you were, you know, you're holding and hoping that we get back up here to the $73 level. But 50%, whoever's shorting it, they're looking to reload right here. They're looking to reload and keep it coming back down. Now, the other thing you got here, you got this trend line we just put up, right? This trend line is the overall long-term trend line. Now, let me bring this in. I know I got some stuff on here, but you see that? That's the overall trend line. This is from way back towards its high in November, right? The high was right here in November. And look at that trend line. It's just riding that trend line down. It did try to break out of it, but it tried to, you know, do the thing there. Excuse me 1 second. Hold on a minute. A little something there I had to take care of. Okay, so let that work itself out. So here, the overall trend on Uber is bearish. And then we move into a little shorter time frame, into the 1 hour time frame. And we are still bearish. And if it can't breach, if it can't get above this, and at least it's got to, if it's going to break this trend line, then it should come up to this trend line, and then we'll probably see it again. Reverse itself, reject, and keep coming down. And we'll just keep an eye on that. Lyft is in the same boat. Lyft is terrible right now. Lyft, they were down overnight. They were like at 12. Well, what'd they get down to yesterday? $12.47. Same thing. Right? What time is it? I got to keep an eye on the clock. 41. All right. See that? It broke that trend line, that upward trend line. Done. Now it's in a downtrend again. Again, I have to ask, what is going to push these apps forward? What is going to push these apps forward? Look at that. It's perfect. It's perfect. Right? It's trying now. It's just trading sideways because Lyft is probably where it should be as far as the stock is concerned. Lyft is probably where it should be, between 10 and 13 bucks a share. They're not a broke company, but what's going to push them up? What is the next catalyst to push them up? Don't say autonomous vehicles, because both Uber and Lyft are going to get their asses kicked by Waymo and Tesla. This is going to happen. You hear more about Waymo on the road without the Uber integration than you do with the Uber integration. And Waymo's a company that can go either way, right? They can work with other apps, or they can work, independently. It's going to happen no matter what. We got them all over here in South Florida now, right? Then you got Tesla, Robotaxi. Robotaxi's coming. I'm just telling you. I personally use the FSD almost every day. It's coming. So what's going to push Uber and Lyft up? What's going to push DoorDash up? I don't even like DoorDash. But my buddy Steve over at Rideshare Rodeo has been tracking their stock. There you go, bro. Look at DoorDash. They're trading today at 149. They've been as high as 283. 283. They're at 149. Right? 149. Look at that. That's 50% they've lost off their stock price since October of 25. What's going to push DoorDash up? Not those little robots they're trying to throw out there. There, we can get rid of that. That's done. Not the robots. Not the robots that now is going to depend on people. And let me get back to what I need to get back to. That's going to depend on people to hit the button so they can cross the road, cross the street in the crosswalk. Not them people, right? All right, here we go. All right, let's set up here. We're about to. Let's see. Make a decision here. It's building in. We got 30 seconds left. 30 seconds left. Okay. We're going to see where this, right now, this range looks like. It's not going to be a killer range this morning. 90 points, so 180 bucks if we do a full retrace when we decide to take a trade. But we haven't decided to take a trade yet. So we're going to tighten that up. We're on MNQ this morning. We're going to trade the 15-minute orb unless I don't feel comfortable. All right, 15-minute orb is in. Let's look at our 5-minute volume. First candle, 43,000. Second candle, 34,000. Third candle, 25,000. Volume's falling off, y'all. Volume is falling off on the 5-minute candles. We are bullish right now, although our indicators are neutral. We are bullish on the short term. We got our trend line up. We're above VWAP, above midnight range open, and above the 8:30 opening range. So let me do what I do here. 424, so we'll call that 425. Here it is, 425. Oh. All right, let's see what we're doing here. So we're looking for a 5-minute close above or 5-minute close below. But we have to be careful here, man. Because we look at yesterday's high. There it is. That's yesterday's high right there. So if we put this in there, snap that line right there, we're going to lock that in. That's the high. Now, that's a fair distance from 69 to 38. I mean, hey, that's 70 to 30. What's that, 60 points, 70 points? Okay. And let's see what happens here. See, you got to be careful. It's pushing up, wicking up, pushing up. But if the volume's not there, more than likely it's not going to hold. You've got to have volume and a strong push through. We want to see that energy pushing up. Let me get into the chats. Good morning, Mr. Richie. Uncle Richie's in the building. Good morning, Accounting Tom. How we doing? Oh, my God. Oh. And yeah, let's see what else is going on, man. What else is going on? I do have, I don't know if you guys can see, I got a couple of products in last night for my Tesla people. You see the two little white boxes there? Those came in yesterday. We're going to do those. Those are from Riva. I just did the big review on the sunshade for the upper glass. This is for the front glass. There's two different kinds. There's a foamy panel and an umbrella type panel. We're going to look at that. I mean, God, guys, I ain't going to lie, bro. I don't trust this bullish move. I actually thought about picking up a couple of Apex. Another prop firm came through. They're having a 90% off. I thought about maybe picking up a couple of their 50K evals and just trading NQ full size minis. Same thing, right? Same orb, and just going for it to see if I could pass them in this choppy market where I ignore my gut feeling and the price action, and then just trade the orb straight mechanic, no matter what. And then I thought about it. And I was like, you know what? This is what happens for me. We got a minute and a half, almost 2 minutes. Yeah, about a minute and a half left on this candle here. I believe the way you practice is the way you play. And if you like to gamble, then you're going to constantly want to gamble. It's always going to be in the back of your head. Or maybe you get mentally triggered or emotionally triggered on a trade, and you're like, you know what? I'm going to revenge trade it. Screw it. Let's just make a run and see what happens. If it don't work out, we just start again. That's a gambler's mentality. And when you're trading, you know, in the beginning, when I got into the futures, I mean, I passed several of these evals, but I can't get to the I'm in the sim funded and I can't cash out because I'm trading like a gambler and not trading by strategy, whatever the edge is. I don't have an edge. Everybody says you got to have an edge in the market. I don't have an edge. I have experience, but my experience is nothing compared to what a lot of these guys are. So that's why I'm trying to trade in a mechanical way. I just want to trade mechanically, right? And that means in 38 seconds, if this candle closes above the orb, I'm supposed to take the trade, no matter what. I'm supposed to take the trade. Now we're starting to get some volume on this candle here, 32K, right? It's actually now it's going to close above, but it's going to be so far away that do we still take the trade? You see, this is where I get trapped. This is where I get trapped in this. But it does say take the trade. So if we take one micro and we lose, right? And remember what I said about yesterday's high? Here it is. This red line is yesterday's high. There it is. Now I'm supposed to take the trade. And there's the first target. So what's oil doing? Let's see what this next candle wants to do a little bit. Because it's right here. It could easily reject yesterday's high. That's what this is, right? This is yesterday's high, previous day high, PDH. It can absolutely reject here, come back in, retest the orb high, and then take off. And that's what I think I'm going to wait and see. I want to see on this candle right now if it closes. If we get a body close with a long wick down, this wick, I need this wick long. If it wicks down into here and goes, we can take the entry. If, again, we're setting up a 5-minute fair value gap right here. If this sets the gap, next candle opens, wicks in and takes off, we take the trade. In a choppy market like this, I don't know, man. You got to be, patience is everything. And if you don't take a trade, you didn't lose any money. You preserve that capital. We all work hard for our money. No matter what, we're working our asses off. So, you know, we have to be smart with it. Oil prices right now, Tom, coming down. We're down to 102.79. listen, once they get the Iran deal done, and we got troops on the ground, there or troops in the area about to go on the ground. They're going to go and they're going to secure that little island out there. They're going to get that Strait of Hormuz open. That's going to happen. Whether Republicans, whether Democrats, uh, whether Americans or Europeans like it or not, they're going to get that open. They're going to seize that island. They're going to control that oil flow. That's going to happen. Mark my words, it's going to happen. And whoever gets in their way is going to get mud stomped. That's just the way it is. It's just the way it is. And so, but okay, so then they get that open. We'll see oil prices drop down, right? And you'll see the market rebound. But why would lower oil prices push the whole market up? It's not a good catalyst. It's not a good catalyst. So what's going to be the next thing? You guys let me know. You let me know what you're hearing out there in the world. What's the next thing that's going to push the market up? I don't know. All right, we got 2 minutes left on this candle here. What's going to be the next thing? People say, well, Vinny, you don't know what you're talking about. I don't. I only know what I see. Tesla right now currently trading at 364. SPY total currently trading at 641. I will show you guys that because I can do that. I have this ability to do this. Where's it at? Where's it at? Where's it at? Where's it at? Let me get the right one. Is that the right one? Nope, it's the wrong one. There you go. Nope, that's the wrong one. Boop, 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 boop. That's the Dell over there. Oh, that's why. There you go. So you can see Tesla right now. Tesla right now trading at 364. SPY currently trading at 641. Kind of subdued. I mean, it's up. It's upticking, but nope, we don't want that one. We want the Alienware. There you go. Okay, now we're back. See, now we're breaking out. It's trying to break above yesterday's high. And it could go. It could absolutely go. But I'm not convinced yet. Still got about 50 seconds left on this candle. We are getting the long wick, though. But see, now the trade's got to set up for me like this. This is what I'm going to look for. Right? This is what I'm going to look for. And we'll set this down here. Right? This is what we're going to look for. We'll look for a 2-to-1 on this trade. So if you guys can see, we now have a trade set. This is what we're looking for. If we miss it, we miss it. That's okay. I don't have a problem missing it. All right. We're willing to risk $166 to make $332. That's the trade. That's the trade I want. And we'll see what happens. See if we get a little retrace over here or if we don't. That's the trade. If we miss it, we miss it. No big deal. What'd we do? Did we waste time? Not really waste time, but we sat here, we observed the market. We know that the overall trend is bearish. We're seeing we're seeing dip buys coming in right now based on whatever news from Iran, because there's no economic news that's good. And so we're just going to let, and if we miss it, we miss it. Live to see another day. Nope, can't do that one. I've been dealing with a new setup for rideshare. I can't mention it right now, only that I am in the testing phase. And if it works out, we'll take a good hard look at it. But it's got to work out first. But don't expect to hear anything from me on that for the next 2 months, 60 days. What's everybody up to out there? Are people working? Are they trading? Are they working? Are they honing their skills? What are we doing out there? I'm trying to keep up. It's a little tough here to do this morning. Let's see. Okay, there's the chat. Good. All right, so we broke through previous day high. I want to see it come back into this and wick out. You see how we got this wick here? That's what I want to see happen here in this green block. I want it to wick in and pop right back out. Could we have taken a trade here? Well, yeah, we could have, but it wouldn't have been worth nothing, right? It would have been worth 25 points. Well, I shouldn't say nothing. 24 points. You know, that's 48 bucks on a $2 contract. That's nothing. That's real money. But we're looking for the longer run here. So let's see what happens. If this snaps off, we'll jump in. There it is. If this snaps in and bounces out, we'll take the trade. If it gets here and it kind of lingers a little bit, then we don't take the trade. If we come back, we can come all the way back. Here's another thing people don't realize. Let me get that back open. This could come all the way back to the 830 open. Because this is where, when you look at fair value gaps, smart money concepts, fair value gap traders usually have their stops at the beginning of that candle, at the bottom of that candle. So the market will come back and hunt those stops down, snap them out, grab the liquidity, and run right back up again. It's the way the market is. Accounting Tom is working. I know Uncle Richie is probably on the edge of his desk, and he's looking at the market and like, okay, let's go. We need some positivity in the market. And yes, we do. We do need some positivity in the market. We haven't had any in a while. You know, that's the other thing I did not look at. Let's see. All right, so we had just hit the premium zone. Now, this is a whole nother part that I don't like to bring in until 10 o'clock, but we're close enough to now. So if we hide that and that, okay, if you're a smart money concepts trader, you'll see here we got our fair value gap sitting here. We're in the premium zone. So this is normally where, in the premium zone, this is where institutionals will have their sell orders set up. And they're looking to short it back down towards previous liquidity, which would be down here, this discount zone, right? A lot of times when this price rejects, it'll come back down into this equilibrium zone where the balance price, right? And so institutions will sell here, sell it down, go short, and they'll wait till it gets down here, and then they'll buy it up and take it long. And when you look at it there, look at it on the 15-minute chart, you guys see where we're at. We're now hitting the premium zone, which is yesterday's high, but you're hitting the premium zone. So institutions, if they're looking to remain bearish, this is where they're going to start selling off and going short. I should say going short. This is where they want to go. And then you'll probably, you can always get this kind of stuff, right? This stupidness, right? So here we went this morning, right? Went up, broke through equilibrium. Sellers were sitting here, came back down. They let the market go, came back down, and now they're taking it up into the premium zone. This is where they're at. So is this what's going to happen? I don't know. We're going to find out. That's on the 15, but let's get back to the 5 where we're trading. But you can see the path. This is from the 15. Fair value gap was in there, right? Came down, bought it up. For what? There's no reason why. There's no reason why this should be pumping right now. But it is what it is. Get everything back on board. Let's see what happens. We don't need that there. We kind of know where all that's going. They're trying to buy it up. They're trying to buy it up. They want to at least get that target 1, TP1. Trading is boring, guys. It's not like this great big you know, this exciting event. Chat. No, man, trading's boring. But if you stay mechanical And look, we could have, like, the move was from here to get into the trade. That was the mechanical trade, right? We can move this out of the way. The mechanical trade was this. This was the mechanical trade. I can always come back and set this trade again. This was the mechanical trade. We broke. All right, hold on a minute. Let me get that out of there. We broke above the orb. Broke above the orb right there. So that would have been where we got in. Our stop loss would have been at the midpoint. And then we would have been hunting target 1 and target 2. So this would have been a 1-to-1 there, right? So if we would have did that, 215, $209 loss for a $215 win if it gets there. But you see, it's premium zone. Premium zone is like, don't know, previous day high. It's a week high, but previous day, I don't know. So we would have been okay with that trade so far if that's what we were doing. But I don't trust the market right now. And because I don't trust the market, I want to see what it's going to do here. Okay, so we'll set that there. We'll look for a 1-to-1. Well, we'll look for a 2-to-1, and then if we get into this trade, go from there. Okay, so that's a 2-to-1 trade right there. Let's see what happens. Risking 227 to make 454. We'll see what happens. But there's a lot of stuff going on here. Oh, man. All right. See, we got 5 people in the chat. What up, chat? Where's everybody from? I know Uncle Richie's here in Fort Lauderdale. I know County Tom's over in Tampa. And here's the other thing, too. So I stop my trading at 11 o'clock every morning. I'm done trading. I do not trade after 11 a.m. Nothing good happens after 11 a.m. in the market. Very rarely, right? You're getting chopped up in lunch, and you come back in the afternoon, and, you know, it's just, to me, I got other things to do. So from 9 to 11, I trade the markets. From 11 to 12, from 11 to 11:30, I'm coming off the markets, and it's my little break period in there. And then from 11:30 to 1:30, I'm either taking a nap or I'm working on my Amazon stuff. And then, you know, 1:30 to 2:30, shave, shower, get dressed, and then I'm in those streets, man, on Uber. In those streets on Uber. I still have not given a Lyft ride since November of last year and do not intend to. Uber's been good to me. I got to be honest. It's in season, but Uber has been good to me. I got no complaints. But we know, if you're in the South Florida market, we know our season's coming to an end here at the end of the month. It's going to be over. And then we're going to get into our 4 or 5 month dry period. So those that are out there driving, you know, start thinking about those side hustles or what else you're going to do, because you know, it can get painful. And you know, we gotta call it square. We know Uber's going to yank Premier from all the Teslas, and not just Teslas. See, before it was just Tesla Model Ys. Everybody's like, oh, they're going to get the Model Y off Premier. No, they're taking it from everybody. Because they're moving into the Uber Black model. Why are they moving into the Uber Black model? Because they want more cars on X and Comfort. X and Comfort is one and the same damn platform. It doesn't matter. All Comfort did was trick drivers into buying bigger, newer cars so that they could be Comfort and earn 2 cents more a mile. It was a mind shenanigans. It was shenanigans. So you know this. But they want to push more cars down. And as they're pushing more cars down, they're going to start ramping up more autonomous vehicles in the city limits. And you know, like Eddie's found out in Austin. If you're in Austin, Texas, you know this, right? More and more autonomous vehicles. I just saw the other day, Zook is out there now. The Amazon autonomous vehicle. That's the one, when you look at it, you don't know if it's coming or going. And so now that car is running around. And it's always going to be in the city, within the city parameter. This is why. because they're not going to travel long distances to pick up or drop off. They're just not going to have to. So that means they don't have to use as much battery, which means they don't have to stop to charge, which means they can do more rides and they just keep going, moving. The hybrid driver model, human model, is going to be for those rides that go from the city or the airports, say out 10 miles away from the city center. I don't know what the number is, 8 miles, 10 miles, whatever it is. And they're going to, whoop, that's where the human driver will go. And the human driver will be so hungry for the ride that they're going to take the ride no matter what it pays, because they're not preparing for other stuff. They're not getting their pivots together. So, you know, that's the way it is, y'all. All right, we got to make a decision here. You see, now we're starting to retrace a little bit here. But look at the selling volume, right? Look at our volume candles here. Our selling volume is way below all our buying volume. 28,000 on the last 5-minute candle. Right now, we're currently at 22.5 with 2.5 minutes to go. Well, that was that candle. I'm sorry, we're at 15 with 2.5 minutes to go. So what we're going to look for here is we're going to look for a wick. I want to see that wick come down and it shoot back up, right? Because I think at this point, it might be able to hit this. It might. Real quick, let's take a look at something. Looking at the higher time frame, now we got relative equal highs here. Look at this. Look at this bad boy here. Change that to blue. Got relative equal highs here. See that? Equal high from yesterday. This was basically broke through this little bit of support on the hourly, came up, rejected, and went back down. So this again is why we wait to, well, why I wait to see. Are we going to get the wick? Was this a fake out breakout? Moment of truth. That there. Moment of truth. We're going to let this candle finish and make a decision. It is starting to snap up a little bit, but we need to see it. See over here, this is the 5-minute chart, but here's the 1-minute chart. Now this is the 9 moving EMA. If it goes above this 9 moving EMA, then we can say, okay, that was a trade. It's giving us what we want, but we got to see this candle close. We got to have, see, a lot of traders would have front run that already and jumped in that trade. Nothing wrong with front running if you feel confident you're accepting the risk. But we didn't front run. I don't front run the trade. I need to see a wick and a bounce. I need the candle to close. 27 seconds on this candle. See what happens. 8, 7, 6. I'm not getting that big wick I want. It's going to be close, y'all. Okay, there's the next candle. Up. Now we're going to be in a little bit of a squeeze here. Because now we got a bearish fair value gap forming. I didn't get that big wick. That's a big candle there. Right? That's a huge candle there. That's a 63-point candle. That's a $126 candle there. And did not get the big wick that I wanted. So no trade. No trade. On the 1-minute chart over here, you can see it stayed below the 9 EMA on this. There's VWAP. Don't be surprised if this comes all the way back down to VWAP. Learning price action, man. And look, I don't know shit. Now I'm going to keep saying I don't know nothing, but this is what I look at. This is what I think I need to be looking at. And some people say, well, Vinny, you know, you could have took the big green candle. I don't trade the 5-minute fair value gap. I mean, the 5-minute orb. I could, right? And we'll go back and we can look at that. But there's more risk in the 5-minute orb than there is in the 15-minute orb, I found. Right? Now, see, now this is wanting to push. See what happens. We're going to get a little bull flag here. See what happens. See what happens when it gets here. Again, pushing up against that previous day high. Trying to break out over here on the 1 above the 9 moving average. It's trying. For me, the markets are just, they're undecided. Now, this needs to be said. The way I'm trading, I'm looking for, 50-point moves, right? Of profit, 60-point moves of profit, because I'm trading one micro contract. I'm trading the longer point totals, not the short point totals. If I were trading NQ, then I'd only be looking for, 5-10-point moves, because 5-10 points, that's 5 points, that's $100. 10 points is $200. A micro contract is worth $2 per point. A mini contract is worth $20 per point. You see the numbers? So your range changes. So in order for one micro to make $200, it's got to move 100 points. But for one mini to make $200, it's only got to move 10 points. That sounds like, well, Vinny, why are you trading micros? Because your risk tolerance, just like on 10-point movement can make you $200, a 10-point move can cost you $200. And when you got, and here's the big thing, guys, I'm telling you, this is what people don't understand. This is where a lot of prop traders get in trouble. Okay? That one candle right there is 65 points. That's $1,300 on that candle right there. It's a $1,300 candle. $1,300. That's it. Nope. No thanks. Actually, it might be my math right. 6, 20, 12. Yeah, $1,300 candle. This candle here. Again, 70 points, $1,400 candle. So unless you got enough capital behind you, do you really want to trade the minis? I guess if you're a gambler, you're not worried about risk management, or you got a shit ton of money behind you, then you can take those chances. I've traded that way. I've blown accounts left and right that way. This is the first time I've traded a micro account with a determined set of rules. And you see, it's still not going anywhere. So even if we got in here, even if we would have gotten in, okay, even if we would have gotten in where the strategy told me to, the premium up here kept me low, previous day high kept me low, no real catalyst pushing the market up kept me out of the trade, because from here to here, let's just say if we caught the top, it could have been, $80, $90, $95, right? We could have got $95 out of that. We could have gotten $95 out of that. If we were trading the mini, it would have been $950. But I didn't trust it. I didn't trust it. There are times for me when I see a trade and I know the trade is good, it's like that you just have that confidence. Not that any trade is guaranteed, but you just have that confidence. And then there are times you just don't have any confidence. You don't have any confidence in the market. Right now, I don't have any confidence in the market, because at any given point, any given moment, this whole market could get snatched because of the geopolitical situation that we're in, because of the economic pressure that we're on. Did you guys hear Jerome Powell yesterday? $39 trillion debt isn't that bad. He said, but we got to start managing it. This is the Federal Reserve Chairman said it's not that bad, but we got to start taking care of it. Are you serious? $39 trillion in debt. And he's like, oh, no big deal. What the? Are you kidding me? Anyway, now you see previous day high, right? Remember that previous day high right here? Look at that's just sitting up there. That's the ceiling right there, dude. So we got the look above and fail. Ceiling right here. We've mitigated. We didn't completely close it, but we've already tapped this fair value gap twice. So right now I'm getting a lot of indecision, not necessarily red flags, but not green flags either, right? We can break above this and break above this. We might get a little pump up, but right now I don't see a trade. Not for me, not for what I'm doing. I don't see a trade. Oh, oil is down to 102.35. ES, the S&P 500 is kind of steady. 64.80. It's really not doing anything. It's rolling over. It's rolling over just like this. So, yep, I'm not really seeing an order right now. I'm not seeing a trade right now. Tesla's kind of holding steady now at the 360 level, 364 level. SPY is hanging in there at the 640 level. Again, no news. So you got the pump of the market. I fully expect this to retrace and follow. I expect this to just roll over. Whoop. Come on down. There's no catalyst. What's the catalyst? Unless the war ends today, what's the catalyst? I don't see it. I think this is all shenanigans. I think it's all bullshit. It's a 15-minute candle. 15-minute chart. Let me take off my garbage. All right, take that out there. Take the orb out there, and you can see what we're looking at. Premium zone, 15 minutes. You look across. Remember that blue line I had here? Here's the blue line. Support, resistance, resistance. And it's right there at that blue line again. Is this going to be support or resistance? It's going to take some power to push through this and get it moving up. Right? We can even take this back to Asian market low. There you go. This is broken. We don't need that anymore. You see what I'm saying here, guys? This is the stuff that I look at, right? So there's our no man's land. This is a no trade zone. We'll make this red. Red. It's a no trade zone. That's where we're in right now. We're looking to see what it wants to do here. But right now, this is a no trade zone. Premium's right there. Right? There's your premium. Even if all you did was trade between premium, equilibrium, and discount, you can do this. I mean, if you're willing to put in the time to learn how to trade this way, you can absolutely trade this way. If you're above VWAP, right? If you're above VWAP, you're long. If you're below VWAP, you're short. There's so many different ways to go at this, to go at trading. It's not even funny, right? And you could go from, because as an example, from here, hold on. There's no one direct way to trade, but from here to where price currently is now, that's 329 points, man. That's $650 trade, $660 trade, my bad, before commissions. There's 660 bucks right there. So if I took the trade at 6:45 this morning when I first opened up the chart, and I saw that we were above, right? I saw that we were bullish on the anchor. You could have traded that easily. Easily. Some people, that's all they do. That's all they trade. They trade VWAP. But now I would need it to come back down, tap VWAP, and reject and take off. Right now, we are in no man's land, bro. So many different ways to get this done. And you pick a style that works for you, whatever your mind's eye sees. Put that back up. We'll put the orb back up. Did you guys know there's a 30-minute orb also that people trade? Oh, yeah. It's a 30-minute orb also. They'll take the first 30-minute candle, right? They'll take that first 30-minute candle, which is here and there. And then they'll break down into a 5-minute chart, right? So here's the 5-minute chart, rejected off the top of the orb, came in, hit the fair value gap. This would have been their trade. This would be their trade right here. So this would be right here. Hold on. This would have been a long. Fair value gap right there. That would have been their bottom end. And this would be the top end at a 2-to-1. This would be their main target right there. And there's your 30-minute orb trade. One contract, risking a 166 to make 331. Right? And now, based on that, you come over here. I'm just showing you different ways that people trade, bro. Right? So now you take this to a 1-to-1. Actually, you take it to a 1/2-to-1. Because this is where you're going to move your stop loss so that you can remain in profit. So there's your 1/2-to-1 right there. Slide that right on top. Right? So you would have got here. You would have moved your stop loss up. You would have already been up. What was this trade? What was this trade worth? 160. So you'd be up $80 and you would have stopped out, but you'd be $80 to the plus. You'd be good to go. You could also take this up to 1-to-1. Right? And once you hit 1-to-1, move your stop loss up to a 1/2. So many different ways to trade it. Trading is not a singular, only one way to do it. It's just like anything else. Just like driving, bro. You don't drive the same way. The way Uncle Richie might drive, or some of the guys down here that I deal with, Steven and Pascal and Lazzy, the way those guys drive, completely different from the way I drive, but we both accomplish the same thing. Just letting you know. A lot of different ways to trade, bro. Don't let anybody try to tell you there's only one way to trade. Some ways might be better than others. Some ways might be safer than others. But don't ever let anybody tell you there's only one way to trade. That would be the 30-minute orb if we were trading that way. Now, I could incorporate that into my trading strategy. I could. I could incorporate the 5-minute. Let's look at the 5. So the 5-minute orb would have been here is first candle. Right? So we got our, let's do this. Let's make this purple. We'll make that, we'll leave that yellow because that's the 30-minute orb, right? All right, so here is the, oh, and let's put in, let's do it this way. Let's put in all of them. Okay, so the purple line would be the 5-minute orb. The blue line is the 15-minute orb. And whatever color I got up here is the, where's it at? There's the 30-minute orb. And the yellow is the 30-minute, right? Can't really see that here. Let me thicken that up a little bit. Boom. Okay. Boom. So many different ways to trade, bro. And people are really good at what they do, dude. So 5-minute candle this morning. We know we would have been bullish, right? So this would have been our risk on this 5-minute candle would have been a little different. All right, so 80, so that would have been 40 would be our we'll just say there, right? We'll just say right here. Make that green. Right? Well, actually, no, we would have traded the entire move. Right? We would have traded the entire move. So we could have came in here. We got our candle close here. Right? Wait a minute. 5-minute candle. No, it would have had to have closed above. Nope, it still would have been right here. Yeah. I had to think about it. That would not have made a difference today. This is back testing. When you hear people talk about back testing, this is what they're talking about. So on the 30-minute orb, though, we'd still be in the trade. There you go. Anyway, looks like we're not going to get a trade in today. We're stuck in this no trade zone. I wouldn't touch it. I'm not touching anything in here. Not based on the way we started with the original 15-minute orb. I'm not touching anything in here. It did wick in. It did come out. We could have been in this trade here as well. I didn't feel comfortable because we're right up against this zone. That's pretty much what I got. It's 10:30, 10:27. We've been on for an hour. I didn't see a trade that I liked. I did not take a trade today. We will be back. I don't know if I'm going to be on tomorrow morning or Thursday morning. Thursday morning for sure. Maybe I'll come back on tomorrow morning, and we can go through this again. Get a little more consistent with this. But guys, I'm going to wrap it up. I appreciate y'all stopping by for a little bit. We didn't make any money here. So we're going to do a couple of review videos, get those knocked out and uploaded. And then we're going to hit these streets and try to make some money driving for Uber. And because if we don't make money one place, we got to make money another place. And you know, obviously the holy grail is to have all three phases. All three phases. All 3 points on the crown making money. You know, making money. Amazon, I make a little piece of change every day. Every day I make a little piece of change. Not a lot, a couple bucks. But those couple of bucks add up at the end of the month. Trading, hit or miss. Markets are a little nuts right now for me. There are plenty of guys out there making $100,000 today. Plenty of them. Just not me. I'm not there yet. And you know, Uber's Uber, man. I know what I make on Uber during the week. I'll go out for a couple hours, maybe 3 hours max in the afternoons, and I'll pick up anywhere between, you know, $60 and $120, somewhere around in there. It depends. It's Tuesday, could be 60, 80 bucks. You just never know. And so you just keep moving forward, man. A little bit every day, a little bit every day. Team no quit. All right. With that being said, y'all, I'm going to shut this one down. I appreciate y'all hanging in there with me. Look in your notifications. If I'm going to go live tomorrow morning, you will see it. We will definitely be live tomorrow night off the clock podcast, and we'll open that up a little bit and have some fun with that. With that being said, y'all, we out. Peace. Stay safe.